Why do you want them to listen to your podcast?
So that when they think about starting a business, they've got the content that is pointing them in the right direction.
That is such a valuable piece of advice there.
The change in mindset makes a massive difference.
Welcome to Aussie Lawn Star.
Katie, welcome to the Dungeon and Aussie Lawn Stars. This will be a first. I've been talking about you behind your back.
And I appreciate that because I've had people let me know that in the best sense. So thank you for that.
Well, that's good. And we were just saying beforehand, I'm in the dungeon and it's not creepy at all. So I'm glad that talking about you behind your back is a positive thing.
Absolutely.
Katie, let's give you a quick introduction or a long introduction. I'm not worried. My interviews normally go for 1 hour through to 3 hours. So, settle in, get a book. But we want to know,
yes,
from your mouth, your background, and I'll preempt this, the profit first business model, but your background prior to doing a podcast and the profit first model would be very interesting for people to hear.
Yeah, sure. So I am the kid of self-employed parents.
Nice.
I was never, ever, 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 ever going to work for myself. I have always, I grew up on 5 acres on the Hawkesbury River, loved to be outside. My dad was a motor mechanic. I was always in a shed somewhere building something or pulling something apart. I wanted to be a motor mechanic, but was told time and time again by my amazing careers advisor in high school that I couldn't do that because I was a girl.
Yeah.
I was still going to do it, but instead I skipped the country and went to America as an exchange student for a year at the end of my high school. And when I come back, I decided to take the sensible route and go into financial planning in the corporate world because I'd always loved numbers, but also realized that, and I'm not that old, but it was still at a time where girls in that space was not something that was normal, and would have been a really, really hard slog.
There was a
And
girl in my school that became a motor mechanic, and she was one of the earlier ones. So she's about 2 years older than me. That'd make her pretty close to 50 by now.
Yeah.
So one of the earliest outstanding female motor mechanics around.
Yeah. And I was fortunate that my dad was a mechanic himself, and that he had a number of mates who were exceptional at what they did, like from building boats to cars, bikes, all of those sorts of things. And so now I look back at it and think it was probably a good thing because I probably would have been bored, because, servicing a car is not my idea of fun. Like I want to be building the engine to make sure that it's going quickly and all those sorts of things.
Yeah,
so,
of course.
I took the sensible route and became a financial planner and worked for a Big Four bank and then moved into auditing financial planners. So it sounds super riveting, I know, but I actually really loved it because I worked specifically with self-employed people for the most part.
Yep.
But what I found was people would come to me to plan for their retirement 5, 10 years out, and they'd worked their butts off and they really had not much to show for it. And I hated that. And so then I had my kids and decided that I would work a bit closer to home because at that stage I was working in the city, and realized one day, and this sounds slightly ridiculous, but I'd come across Xero, the bookkeeping program, and went from never, ever, ever, ever working for myself to I'm going to start a bookkeeping business because this tool could give business owners up-to-date information on their financials, which for me meant that they could make quicker and better decisions, which then would translate to they'd be able to make more money sooner to be able to retire better. Started my bookkeeping business, promised myself that I wouldn't be overworked, I wouldn't have cash flow issues, and I wouldn't have people owe me money. About 2.5, 3 years into that, I hated my business. People owed me money. My cash flow sucked. And I did everything that I said I wouldn't do. I also realized at that time that I was no good as an employee and I couldn't go back and work for somebody. So I had 2 choices. I could just go, this is what small business is like. It's going to suck. There's going to be ups and downs, and this is it. Or I was going to find a solution. I'm not one to sort of just take things as they are and just be happy with them. So I went searching for a solution. And that's when I come across Mike had just written Profit First, maybe 9, 12 months beforehand. And my business coach at the time actually said to me, this would be a great book. I think you'd really love it. I read it, thought it was amazing, started to implement, saw some great changes in my business, and then I stopped doing it because things were going okay. So I stopped.
Yep.
No surprises. The business went backwards. I was in the same spot as I was before. So I pulled the book out again. I reread it, jumped back on again. Again, no surprises. Things picked up. It was amazing. And I stopped again.
We got some
Third
very
time
similar
lucky.
things happening there.
Absolutely. And this is what everybody that I talk to has a stop-start relationship with Profit First.
Okay.
And they think they're different and they think that it's something wrong with them. And it's actually not at all.
Yeah.
It's partly, I think, because we have been told that business needs to be hard and that cash flow is going to be terrible and that you can't make money in the first 3 to 5 years of business.
Yeah.
So we just follow that and go, oh, this is what it's meant to be.
Yeah.
And then third time lucky, I stuck to it, religiously did it. And then that's when I decided to be certified to be able to teach it to my bookkeeping clients because of the change I had seen in my own business.
Yeah.
And then from then, that's why I did implemented it with my own business bookkeeping clients. Then I started up my coaching business and just solely work with clients from a coaching perspective to implement Profit First with them.
Yep.
Wrote my book, did my podcast, all the way through to now. I, in June, become the CEO of Profit First Australia and New Zealand as well. So now I get to train and be the responsible, I guess, for all of the certified Profit First professionals in Australia and New Zealand. So
Awesome.
I get to make sure they know what they're doing so they can then help more clients as well.
I guess that'll be important at the end of this podcast when we tell people where to find you, but we can also tell them where to find other trained professionals.
Absolutely, yes.
So I've had some similar experiences to you, and I've been in business for close to 15 years now and floundering along at the start. And then I didn't read Mike's book. I enlisted a new accountant because the accountant that I had been using, which was I selected an accountant at the start for business acumen. So it needed to be somebody who was going to help me with business structure, not just crunching numbers and doing tax.
Yes.
And then after a while, they got busy and they handed my file to somebody in their organization because it went from different structure. Their business changed structure. And I ended up saying, I'll find a new accountant. And the new accountant sat down with me, looked over my numbers, scared me, but then he did some of the things you've done. So he got me set up on Xero, and then he told me to go and set up several bank accounts. He didn't use the words Profit First. At least I don't believe he did. I'll go back and talk to him shortly. But he did say you need to have all these different pockets to put money into, so you're not just looking at one big lump of money.
Big lump.
And that's probably one of the key things in Profit First that people can take away. But we'll get to more of a breakdown of the model, the business model, and what people can do with it, and the importance of getting help doing it so that it actually sticks rather than going up and down.
Yes.
So the other thing is, you mentioned your love of motor cars and bikes and things, and your love of performance rather than just fixing somebody else's and maintaining it. I tend to bang on a little bit on this podcast about motorbikes because I've got a dirt bike and a road bike, and the road bike is.
And firstly, what sort of dirt bike do you have?
2-stroke KTM.
See, I'm a Honda girl. Anyway, that's okay.
I started with a Yamaha dirt bike in my middle-aged dirt bike career. I've always ridden.
Is that when you started your dirt bike career?
I've always ridden motorbikes, but I started on a WR450, and I very quickly realised the WR450 was a cranky cow up in the bush.
Yeah.
So all my friends were saying, go 2-stroke, go 2-stroke. So I did, and I haven't looked back. It's been awesome in the bush. The KTM enduro bikes, so nice to ride in the bush. But I have a very soft spot for Honda as well, and I'm looking at the moment, being middle-aged with a nerve issue in my neck, the road bike is a little bit hard to deal with. The dirt bike's a little bit hard to deal with. I'm thinking of going for something that's neither good on the road or good on the dirt. So go for something like an Africa Twin or something along those lines, which will keep me riding bikes a lot longer than if I stick with the sporty bike on the road and the bush. Anyway, we'll lose half of my audience if we talk about motorbikes too much. I get messages regularly. You need to stop talking about motorbikes.
They can skip that part. It's fine.
Efficiency is the thing that rules a business and the decisions you make as a small business owner. Right Mowers give you the options in their product lineup to match efficiency with size, fuel usage, and the type of jobs you want to target, from catching to mulching or side discharge, from roadside verges to acreages, and manicured lawns to 6 feet tall and super long. I've been using the Right Stander I 42-inch with a Catch Pro for manicured areas and the Stander ZK61 to maximise productivity for large open acreage mowing. If you need to replace your push mower, try the 32-inch Stander B. If you have more open access to residential properties, there's a 42 through 48-inch option that suits you. And if you want to enter the acreage market, the 52, 61 and 72-inch machines have choices in engine size and model type to suit the work you want it to do. Right Standards go the distance, saving you time and money season after season.
My experience switching to Xero and then using multiple bank accounts is probably not strictly on the profit first model. But then I read Mike's book and stumbled across your podcast, and I've looked at what I'm doing. I'm going, even though it's probably not strictly speaking the same as what you would teach with profit first, the principles of having separate bank accounts and making sure that you focus on where money needs to go first so that you don't shortchange yourself is really important. So, yeah, do you want to run through some of the aspects of profit first in terms of what people are going to first experience before you do? One of the other things that's similar to you, the cash flow issue. I sat down with a friend who lives down in Melbourne, and he's worked as an accountant in large organisations, and then he ran his own business. And when I was starting podcasting, I said, talk to me about this. So I've got a couple of accountants coming onto my podcast. What's one of the key things that we should focus on in a small business podcast with accountants talking about? And he said, cash flow. Straight up. We need to talk about cash flow.
Yes. And we don't talk about cash flow enough. We often think it's for big like corporations or, the multinationals or the Woolies and the Coles and that type of thing. When in actual fact, it's critical for us in small business.
Yeah.
One of the reasons why I like why profit first and why I chose it and stuck to that, there are plenty of ways to manage your cash, a number of different ways to do that. One of the reasons why I love profit first is because there's a really clear framework of how to do it. It's so much more than just the bank accounts. So many people will have conversations with me. They say, I opened a bunch of bank accounts and I've been able to put money aside for my GST and I've been able to put 1% into profit, and that's all I do, and it's been amazing. I'm like, great, that's excellent. Some progress is better than none. And I always like to remind them, if you can feel so much better by just doing that small part, imagine how it would be if you were able to implement it all in its entirety for your business and for you. And that I teach my clients that we need to build our business to work for us. What is it that we want, that we need for our family, for our boats, bikes, cars, holidays, whatever it is that we want? That's why we're building our businesses and why we run them a particular way, not letting our business tell us when we can do those things. Profit First is not a magic wand. We don't just implement it and everything's amazing in a couple of weeks. There is a real rough, rocky patch that varies in time depending on your business and where you're at. Some, if it's a newer business or a smaller business, the rocky patch is much less because there's not a whole lot going on. We implement it all and it's much easier. I work with a lot of big builders, big electricians, big plumbers who are turning over multiple millions and have some really hefty ATO debts, superannuation debts, and just debt in general. That is a much longer time frame to implement and turn that business around. But we follow the framework, we follow the process, and we absolutely get results.
With that issue, I've found when I started with using Xero and my current accountants, we looked at how much I should be putting aside into my tax bank account. And I did that, and I made sure every time I put money aside, and then I went back to my accountants when I do my tax return or when I do a review and be like, I feel like I'm going backwards. I feel like I never have enough money in the tax account. And they go back over it and they go, yeah, you're on track. You're okay. You probably got a couple of hurdles to get through, but you're okay. 3 years later, I went back and I said, hey, I'm really frustrated with this. I was almost ready to fire my accountants over it. Shh, don't tell them. And they had a look and they said, you are so on top of it right now. Like you're on top of it. You don't have any hidden things coming up.
There's no surprises coming.
You've got on top of it. It took you a little while to get on top of it, but now you are right on top of it. It's not a problem, and what you're doing is working well.
Yeah, exactly. And too often, and again, it's just in business in general, often we have this strong dislike of paying tax.
Yeah.
So we avoid it, ignore it, stick our head in the sand, and guess what? We always have to pay it. And if we're not paying tax, we're not making any money. And I don't want to run a business that is not profitable. I want to pay tax. I don't want to pay any more tax than I need to, but I want to make sure I'm going to pay some because otherwise I'm working with a whole lot of stress.
Yep.
And so being able to just be aware of where you're at, what you need to pay, what's coming up, and having those tax conversations with your tax accountant. And it's something that I always require with my clients because I'm obviously not a tax accountant, is that we have conversations together with your accountant to work out what your tax situation is and what that tax is going to look like, because that is different depending on your structure.
Yeah.
And there's a whole list of things that will vary that. Ongoing. We don't just wait for the tax return to be completed 9 months after the end of the financial year or 10 months after the financial year to get a surprise bill. Like, we know what's coming and we can plan for it. Often people come to me when they've already got a big bill.
Yeah.
So we have to have a strategy to get that one down and get on top of and maintain where you're at as well. And people don't see that. That's super stressful, and people feel like they're not making any progress until they start to get on top of it and have enough money to pay those bills when they come in. And they're like, oh, actually, we can run a business and be profitable and pay our taxes. Like, it can happen. You just need to have the right framework to be able to organize it. And that's just like one piece of the Profit First framework that is such a game changer for so many people.
Yeah. I've talked to people about this idea. I went to my tax accountants, my accountants, about this idea, and I said, okay, in lawn care, people are usually doing service business. They're not usually offering products. Sometimes they'll offer product in the service, but mostly it's service business. Talk to me about the different margins that we work with in a service industry like lawn care. And my accountants came up with 3 numbers based on my business and based on the averages for lawn care industry in Australia. So they suggested, first off, the average lawn care business in Australia is going to be making around 30% profit. And I would say that's probably rather generous, but that's one number. And I said to them, so all expenses paid and wages paid, 30% profit. And they're like, yeah. I said, so why am I looking at sort of 50 to 60% after I pay my expenses? And the conclusion we came to is that there's no wages. So where there's no wages, you're just drawing earnings. Then you can go, okay, in the lawn care industry, around 50 to 60% of your takings, your revenue, is profit, which, there's no wages, right? And then the third number that we came up with was, well, if you don't have any employees, you don't have any wages, and you're okay, what is your lifestyle benefit from being in business? So things like you've got work clothes that you wear 5 or 6 days a week. You've got the work vehicle, which is your vehicle. You've got your phone, your computer, your iPad, your sunglasses, all the different things that you use, whether you're in business or not, but you have them for business. And we came up with a number of about 85% of the revenue for a solo business is actually usable as lifestyle benefit for that person. So this is really scary in terms of trying to give people these numbers and going, okay, well, a large percentage of them, let's say 90% and the other 10% is probably a bit of a grey area, are taking cash. So they're not even reporting some of their income or a lot of their income to the tax office.
Yeah, so the ATO kind of their like benchmarks and those sorts of figures that they come up with, I don't find them useful because we don't know, we can't confirm exactly what is actually being in those and how they're being reported and so on. And so, and I always say this to all of my clients, I could have two lawn care clients with the exact same jobs, the exact same income, the exact same expenses, and we will set up Profit First slightly differently because you're both human and you need slightly different things. And again, lawn care is probably one of the areas where there's more kind of solo operators running it for their own purpose type of thing, which is great. That's what we want. But I still want to encourage everyone to think about and just have the mindset that you are running a business. And so if you are not taking yourself taking a wage, we need to do that. Now, how your accountant labels that at the end of the year for tax purposes is different. But from a Profit First perspective, I'm always talking about, like when we talk about the owner's pay account, what money are you taking for yourself? Like, what do you need personally? And this is where, again, I come from a different angle where I'm like, I want to work with my clients and understand what they need personally. And then we work backwards and go, great, you need, let's call it 100,000. The business can only give you 80. We've got a gap of 20. Awesome. Let's get to work on filling that gap. Rather than the business can only afford to pay me 80, so that's all I'm taking and I'm racking up credit card or I'm not doing things because I don't have the cash. I always come at it from the other angle. And again, with like, profit margins and those types of things, they can be useful, but when we're comparing them to others, we're sometimes a lot of the time comparing apples to oranges, which again is one of the reasons why I love Profit First so much, because when we're talking about profit, we're talking about cash in the bank profit, not paper profit at the bottom of your P&L, not profit because the accountant has waved a magic wand and labelled things slightly differently, well within the realms of what they can, but given a different kind of figure. We're talking about cash in the bank profit. And we all know we can't buy things with paper profit. We need money in the bank to be able to do that. And that's why often if people are talking about, I have this percent margin or I do this markup, and I'm like, cool, that's great, but let me dig in a little bit deeper and see actually how are you running the business? How are you labeling things? Like you say, like, are you running your phone in the car and those things through the business? When actually you can still do that for tax purposes. Your tax accountant's amazing and they will allow you to do whatever they need to do. I'm not saying don't do that stuff, but from is my business profitable or not, we need to be able to, in Xero, have things labeled in a particular way so you can see that. And one of the things that I do with clients is we create customized report in Xero that is labeled with the Profit First terminology. So your P&L and your balance sheet, you absolutely need for the accountant. But we could create customized reports so it uses that same terminology. This is your total income. This is your real revenue. This is your operating expenses. This is your owner's pay categories and so on. We take off the gross profit off there. We take off the net profit. They're not terms that we use within Profit First in that initial phase. So I don't care what your net profit or your gross profit is when I'm talking about Profit First. Initially, I'm looking at what the income is, how much is going out for materials and subs, what your real revenue is, and then where you fall within those guidelines.
So what we would call that is cash flow.
Cash flow, money in, money out. I don't care. It's always money in. Has it hit your bank or has it gone out? That's how we work when we're looking at your cash management. This is not, a Profit First is not instead of something else. Your bookkeeping has to happen. Your tax accounting has to happen. This is another piece to that puzzle because the bookkeeping and accounting are looking backwards, what has happened. The way we manage your cash is what have we got now? Where do we want to go? And how can we manage this cash better so we can reach our goal? And we always will have a gap there to start with. And then once we set up the initial framework, then it's about, great, okay, do we need to look at our pricing? Do we need to look at our, our costings? Do we need to look at the way we schedule jobs so we're not driving around for half the day? There's a whole range of things that we do. And if you think of Profit First as the tool that helps identify what area is needing the help first.
So two
And
mistakes that I've made early in my business that really brought this home in terms of cash flow is having one bank account or not enough bank accounts. You look at how much money's in the bank and you go, yep, I can buy a new lawnmower.
Yeah.
Or, yep, I can buy a new car. I can buy a new laptop. Or we can go on a holiday, right?
Yes.
And the problem there is most people are in a family too. So if you're a man working in lawn care, and there are lots of women working in lawn care as well, so it goes both ways. But typically speaking, you got this man working in lawn care, wife comes along and looks at the bank account and says, hey, we need to pay the mortgage, we need groceries, we need to plan the Christmas time and the holidays, and there's no money left, right? Or the man goes, looks at, and go back to non-gender roles here, right? If it's the person running the business, they look at $10,000 in the bank, all of a sudden that's spent. So that's probably the first mistake I made in business. And it probably helped me to grow the business a little bit because I'd go and buy a better lawnmower that helped me work harder and get more income too. But yes, you can see the fallacy in that. But there's some necessity in growing the business.
I can see. Well, and I'm absolutely not against growing business. And again, it's just the way we talk about business is, I want to grow, so I can't focus on profit. And my response to that is, why the hell would you want to grow a business that's not profitable? Why would you want a bigger business that's not profitable as opposed to a not profitable business now? Like, we've been almost conditioned that you can't have both together. You can absolutely grow a business and be profitable. Absolutely.
So,
and if you're growing a business that isn't profitable, you're giving yourself a massive headache, a whole lot of stress, because we just are hoping that it's going to be profitable down this track instead of building the business to be profitable so you can grow it profitably. But super common. And again, I think for me, I think it is just almost like the culture of small business. It's not one of those things where you never make any business money in the first couple of years. You're going to struggle with cash flow. You can't grow and be profitable at the same time. I'm just going to reinvest my profits to grow. No, you're not. You're just putting money into the business willy-nilly because you want to make yourself feel better. And you, in the hope that something would happen, is very different to, I've put aside and saved $5,000 for this new lawnmower, and I know once I buy that, I can then do bigger yards in half the time or whatever it may be, which then means that I can charge more in half the time and make double the money type of thing. That is a very different thought to, I'm just reinvesting my profits to grow. I get quite animated about that topic because what happens, I see people when they grow and it all falls apart and they're super stressed, and that's when they hit their bottom and they reach out. And I'm exceptional at helping those type of clients because I've had so many of them.
Yep.
But I would much rather help clients grow profitably because that's sustainable for their business and for them as well and their family, rather than getting them out of a heap and rebuilding the business and having to rebuild the business owner as well.
Lawn care businesses, I refer to them, and I picked it up from somebody else. I'm not claiming ownership of this phrase, but they have, in trades, they're often not considered a trade, but they are the lowest barrier to entry of all of the trades. You can buy a whippersnipper, a blower, and a mower, and off you go. You can chuck them in your old KE laser in the back of the hatchback, and off you go. You've got a business.
Yeah.
Create the ABN later once you've got a customer.
Yes.
That's the way people do it. And I looked at it when I started. It wasn't quite that bad, but I looked at it and I thought, I can charge $50 an hour. That's at least double of what the average wage is. I'll be fine. And then I got busy and I put on an employee and I went to pay them $20 an hour, and I realized for every hour they worked, I was losing money.
Mm-hmm.
So one of the principles I've come across in lawn care that seems to work reasonably well is if you are going to pay an employee at this day and age $30 an hour plus, multiply that by 3 as a general rule, and you're probably going to cover your wages, your expenses, and have some profit.
Maybe.
So
So how I like to think about that is, and again, there's calculators and so on I use with clients to get exact figures. But if you're paying them $30 an hour, they're probably costing you $60 an hour-ish as a rough guide.
Yeah.
Again, before you even think of anything. So then your expenses, your fuel, and all those bits and pieces have to come on top of that as well. And
Yeah.
again, like with if you multiply it by 3, you're going to be round about the mark, as long as your expenses are within a reasonable level. Because if you have no idea what your expenses are and you just run the rule of 3, then you could be wildly out because your expenses are ridiculously like off the charts.
Yes.
And that's actually not going to cover it. And numbers in business has been so complicated for so long, and it actually isn't. But again, we've been told that it is, and the amount of times I hear when I chat to people is, "Oh, I'm just a dumb lawn mower guy, electrician, plumber, builder, blah blah blah."
Yeah.
Like I pull them up right away. I'm like, nope. Or I'm no good with numbers. And I'm like, yet.
Yeah.
You're not good with them yet because you just haven't been shown how to do it properly.
Yeah.
It's not because you're crap with numbers. You just haven't been taught. And that's my kind of number one thing, is teaching people around the numbers, not so they can be a specialist in the numbers like me, but so they have a basic understanding of, if I hire a person at $30, I need to charge them out at this and also take into consideration these other expenses, and stop and not listen to my mate down the road or my cousin's mate or whoever who says, just go and do this and you'll be right. Don't worry about paying tax. You should be running this through the business, rah, rah, rah. But let's stop listening to those people who don't know what they're talking about. Because again, I get to see people at their worst when they thought they were doing the best they could. And they often don't reach out to their accountant or the bookkeeper or somebody like me because they feel stupid. And then that causes them more problems. And that's my biggest takeaway to everybody. I'm like, just ask the question. And if you ask a question of your accountant or your bookkeeper and you don't feel very great when they reply, find another person to send it to. Send me an email. People send me emails all the time going, I asked my accountant this and they said that. Is that right? And I'll respond quite promptly, because the only way we can change is if we help educate everybody. We don't have to suffer with our financials.
So with expense ratios, I've interviewed a guy and I refer to him often, Mark Gladaway. He'll contact me when I say his name. He'll say, "Oh, I need a commission on you saying my name." As low as 7% expenses. The numbers I usually see are more like 40 to 50% expenses, and that's probably on the high side by a business that's not looking for good cash flow. So they're going, oh, you know what? The accountant told me I need to spend $40,000 to not pay any tax.
Yes. And again, that's another percentage where, how is that 7% calculated? And again, comparing apples as opposed to apples and oranges.
Yes.
Mark's 7% could be very different to operating expense that I'm talking about in Profit First, because they're being calculated by different things. So, and one is not better than the other, but we always just want to remember that if we are talking, that we're talking about the same things. So I will always, when obviously with Profit First, I'm always like, your operating expense, your Profit First operating expense should be within here to here.
Yep.
Now that guide will only be useful for somebody of your shape and size business running Profit First. It won't be, you might be at 40%, let's call it, and then somebody compares them to the 7% and go, oh my gosh, this is terrible. My business is awful. I can't believe this. This is so disastrous. But we're not comparing the same things.
Yeah.
And so that's just like one of my biggest things. It's when we are talking around the numbers to be talking the same language. And again, which is one of the reasons why I love Profit First, because it's the framework that we talk about when we're talking about profit. Everybody in Profit First world knows if we're talking about profit, we're talking cash in the bank. Owner's pay, we're talking about the money that you take for yourself as wages, salary, whatever label the accountant wants to put on it, including super and any tax on that as well. When we're talking about tax, that's the tax the business pays. We're putting aside GST. That's what that is. Your operating expenses is your running expenses of business, including wages and super and PAYG for any team members. So we have it's a really clear framework as to what we're talking about in each of those things, which then enables us to then compare within people running Profit First, as opposed to comparing with other numbers and making decisions on that, thinking, oh, this is bad, or, oh my gosh, we're terrible compared to those people. It's like, well, we don't know that because we're not talking about the same thing there. But yeah, that's the framework we use, and then as what that operating expense percentage should be. It should be whatever it needs to be to run the business to give you what you need. And so that will be very different for everybody. There'll be a range. And that doesn't mean just go for it and spend whatever you like and label it as I'm running the business how I want. That's not going to work in the end. But knowing some people may want to have the best equipment, but they may have to borrow for it. So their operating expense might be a little bit higher because they've got their loan repayments that are happening, as opposed to somebody who owns all their equipment outright. They would have a lower operating expense potentially in that respect. So it's not necessarily a good or a bad. I always say with my clients, the numbers are the numbers. They're not necessarily good, bad, better, whatever. They just are. And then it's like, what do we want? And where are we at? What's the gap? Okay, great. So if we want to have 100 grand personal income and we can only pull 20 out of our business, I don't think of that as bad. Like, awesome. We've got an 80 grand gap we need to work on here. Excellent. Yeah. Like, let's get to it.
Yep.
It's not, oh my God, I can't believe you're only at 20. How are you at 20? Like, how do you survive? Like, none of that comes into play when I talk to my clients. I'm like, where are we at? Where do you want to go? Let's get to work.
Are you thinking of leaving your job to start a profitable and enjoyable lawn and garden business? Aussie Lawn Stars shares stories, lessons, and advice to help you grow a healthy, productive, efficient, and sustainable business. Got questions or want more information? Contact Aussie Lawn Stars at iCloud.com or reach out to Gary Ashton on Facebook or Messenger for personal help. But beware, your question may end up in a podcast episode. For business coaching that ensures the right mindset and decision-making approach, check out Think Tank Coaching. Their website is https://thinktankcoaching.com.au. They've been instrumental in helping me and can guide you towards achieving your business goals. You can also email them at thinktankcoaching@outlook.com. Need to set up best practices for bookkeeping, accounting, and business structure? Contact Adrian from Prosper Financial at 02 4977 3363. And don't forget to join Lawn Mowing Contractors Australia and Australian Professional Lawn Contractors Facebook groups. Great supportive communities focused on our industry.
Thank you for listening to Aussie Lawn Stars. Please remember to rate and review the show on the Apple Podcasts app or the player you use. Exciting new shows are released every Monday. Make sure you follow or subscribe to hear the next episode.